What is up, guys? I'm assuming you clicked on this video because you want to learn how to top and bottom tick, catch trades like this. You see it all over TikTok. You see people having these high R trades where they're risking only a little bit and they're taking their take profits super far away. You make a lot of money, and it looks really cool when you post a TikTok and speed it up. And it's actually a lot easier to do than pretty much any other style of trading. You have styles of trades where your risk to reward isn't as different from each other, like something like this. And then you have, like, obviously it varies, but this is to the extreme. This is where you would only be risking about like $200 to make like thousands, like almost $3,000. So the first thing that we need to do if we want to learn how to do this is we need to know which levels price reacts to the most. And that is what I'm going to be talking about in this video the most. We're going to be talking about standard deviation. We're going to be talking about levels. And the first thing that we're going to need to do is get our ICT, kill zones, and pivots. So in here, what we need to make sure we have on is we need to have the week opening, the month opening, and make sure that we are either have this on, the day open, or we have it marked out on our chart. Because true day open, which you can use right here, if you guys want, you can copy these settings. These will give you the levels that I use to catch crazy R trades. You can use 10 too. 10 a.m. open is also a very good price point to enter back in on if you see a resweep there. So when you copy those settings down, and you're going to see that it is automatically going to mark you out. It's going to mark out the month opening right here. This is when the month opened up, and we have this opening price point. Now, you can already see how price is reacting to this level. Right here, we bottom ticket. Right here, we bottom ticket again. Right here, we top ticket. But we can't just be guessing on these levels, right? We have to have other confluences. We have to know what is going on. So it's still showing the month open right there. So if we come up there, we can look for it to react off of that level. Now, we also have the week open, which is right here. And price hasn't come down to hit it yet, but I'm sure it will. And you'll see that it will have a reaction off of it. So the other levels that we have 8:30 open. This is a level where orders are built up. There's a lot of liquidity there, and price can come up and react off of it pretty crazy. It doesn't really do it right here, but as you can see, we flush past it, and then we retest the level perfectly and come down. We also have midnight opening level, which is 000 on the clock on the chart. That opening price point tends to get bottom ticked all the time. Like, look right here, we sweep it by literally 10 points, and then we rip all the way up to here, and you would have made insane money if you were to just enter in with a mini, like 15-point stop, target the next draw. So as you can see, if you guys are taking this all in, it is a very easy way of trading. You're trading off levels, hoping that there's a reaction off of them. But the key thing to this trading style is risk to reward. Now, there is another catalyst that is going to allow you to catch. It's going to allow you to bring the precision way up. You're not going to be guessing which levels. You're not going to be guessing and trying to find just random levels that are going to hit. We're going to be measuring out moves in price action that are going to project where price will manipulate and leave and just completely flip an order flow. And how we're going to use this is we're going to use the Fibonacci tool and you're going to copy these settings right here. And you guys have to watch until the end of this video to really understand what I'm trying to show you guys, because there is a lot more to it than you'd think, but if you take it all in, it's very easy to understand. Like literally like a 10-year-old can do this. So pause the video, watch these, or copy these down, and I'm going to show you how to use this. So these levels right here are kind of institutional levels that price tends to react off of. And the way that it is measured is because the guy that made the Fibonacci tool, the whole reason that it is made is to measure moves in price action that relate to later on moves. So the theory is that if I am to measure this wick right here, this manipulation move, because it comes up, takes out liquidity, manipulates us into an imbalance, and then comes down, we should be able to predict by the size of this manipulation move up where price will turn around. And you guys are going to be blown away by the amount of precision that this has and how good it can work. So we're going to measure from exactly the bottom of this wick right here, this green candle, because it's the last move up, it's the manipulation move, to the very top of it. So we have it perfectly measured out right there. Now we're going to draw a line to -4, because -4 is maximum expansion. The way that this tool is used is once we expand to -4, we are supposed to always come back to -2.5. So if we come over here, we see -4 gets absolutely bottom ticked. You would put your limit order right here, and boom. 30 risk to reward ratio. And now what can we do to try and find our TP? This doesn't always work as good. Like I haven't even measured this out yet, but we can use the Fib tool to also find where we're going to put our TP. You can measure this leg right here, and as you can see, it kind of perfectly lines up with this high, so you would have top ticked that. And you can also pair it up perfectly with, you can use just whatever, you have to be able to look at the manipulation move and the distribution move and make sure they make sense. So in this case, this is a pretty big manipulation move, so we might want to go on a different time frame and measure something else. But the way that these relate do get pretty crazy. So if we measure maybe from this top to this bottom before we get the manipulation, it lines up perfectly with our take profit, which I didn't even plan out. That kind of just randomly set in there. So we have, I'm just going to draw this out real quick. If we're making lower lows, we're coming down, we hit a key level right here. This is a key level, like a fair value gap or a low or something. We sweep a low, and then we come up, make a move down. This right here is your manipulation leg. This is your distribution leg. We can measure this and this to find very important key levels. So now, another thing about this style of trading is you're not going to be trading every single session. You're not going to be trading every single day. You're going to be trading when the key levels line up with important levels, like weak opening gaps. So we have this right here. So in this case, you would take your fib and try and find a level that makes it line up with this gap right here. So we measure out from right here to right here. We are measuring, what is this? The manipulation leg. I'm going to draw it out in a box. This move up that takes out liquidity right here. We make this move down, and then we come down, make a low right here, and then we make this move up, which is our manipulation leg. We measure that from top to bottom, and now we see where -4 is. You can draw that line out. Oh look, it lines up perfectly with the new week opening gap, which is already set out for us because we set up that indicator. And you would set your limit order there. Boom. 15-point stop, whatever you want to do. 10-point stop would be good for this one because you don't want to put it too low. And let's see if we can get a good target with the fib 2. Let's try measuring from this low to this high. So not that that doesn't really give us. We want to make sure that it's lining up with these levels right here. So let's see which high to low lines up best with our current liquidity resting above us and below us. This one right here. Yeah, that one's pretty good. So this would be a good target. It lines up with this high. So you could target that and still get a crazy risk to reward. We can line up with this one and this one right here. Yeah, that's a pretty good level. It lines up with this one, so we could use that. But if you want to just really go for like a long shot, you could measure this out right here from this high to this low, because when you look at it from afar, you kind of want to just see, all right, where does price come up to and come down before it comes up? So this is the manipulation leg. We measure that out, and what does it line up with? This high right here, almost exactly. So you would kind of just pretty much catch this whole entire move right here all the way up until there, and you would have missed out on this consolidation, losing profit. I'm sure even if you measured it from, there's another point where if you measure it from, it'll line up perfectly with this right here. Yeah, and it almost does. And that's measuring from this high, these highs right here. But you don't want to go too far. You don't want to try and get too crazy of a trade, because we just want to keep it as risk off as possible. We want to find valid entries as well as ones that line up with higher time frame narratives. So this means if we go on the 1 hour and look for high time frame fair value gaps, our levels should add up and should align with those to give us more confluence. So right here we see we have this new week opening gap that aligned with our -4 standard deviation level. That's great. That's double confidence that we're gonna make this move up. Let's look for more. So right here we have an order block that aligns with -4 standard deviation. We draw our line, and price wicks it out and then comes down. So we need to be making sure that our there's other levels that align with the levels that we're making. I just used those examples because they were pretty good. Let's see if we can find some from today. Today was pretty bad price action, so the levels might not be playing out as good as they usually do. And look, right now we have midnight open, which is actually being bottom ticked right now. We'll see how that reacts in the rest of the video, but who knows. So let's measure out from this high right here, whoops, in New York AM session, all the way to, I don't know, this candle right here, because this is, the candle bodies are always going to be more precise. So if we measure from this candle body open right here to the top, this is our manipulation leg. The last move that manipulated us up into this 1 hour gap. We actually hit this like order block area where there's obviously a lot of orders built up, and we reacted off of it, so we can measure that out and see where -4 brings us to. Wow, it lines up pretty good with midnight open. So we're going to draw a line there, boom, and we perfectly bottom ticket right there. Do I know what's going to happen in this trade? No. It might keep going down, but it looks so far that we have a perfect reaction off of it. So as you guys can see, I could keep on showing examples more and more. But the more important thing that you guys know is you have to be careful. You have to make sure that you're adding up these confluences. You use standard deviation, which is the fib tool. You line it up with levels like new day opening gaps, new week opening gaps, and you can use the CE of gaps. So like if you have a 1 hour gap right here, we get our box. I'm just going to do this randomly here, so this might not work out the best. We use the CE, so the line in the middle, and we look for price to react off of there. And as you can see right here, it reacts off of it pretty good. I'm trying to find if there's any other spots that we can use. And also, another thing that you can use is your gone box. Let's just say we know we want price to go up. We're going to try and find the bottom tick area for this move. We're going to measure this range and find 0.5. Now right here, it didn't perfectly bottom tick it right here, but it did have a reaction off of it. But you're going to make this box. If you guys want my settings, you can look at them real quick. Pause the video, look at them. I'm going to close it out. Price does tend to react a lot off of the different quadrants if you draw them out. As you can see right here, it will react off of not only halfway, but 25%, 75%. As you can see, it reacted right there. And you can measure out kind of any range and just see where it lines up. You can measure out and just find retracements like this right here. As you can see, price perfectly comes down, makes this high, we come down, hit 0.5%, and then we come back up. So these are the things that you compare with standard deviation. Measure that, see if there's a -4 in there, and maybe that will give you a good level. Now, we can also use the fib to measure out ranges as well. So if we want to see a reaction down off this range, we're going to measure this range out, and 0.705 and 0.786 are the most reactive levels. As you can see, we get a perfect reaction right here. We almost hit that right there, and we also get a pretty much perfect reaction to 0.786 right here. So when you draw this out and it lines up good, now you have that right there. We're also inside of a bearish fair value gap, so this is even more confluence. We're now pretty confident that it's going to go down. Now we can go on a lower time frame and see if a level with our fib will line up good or not. Let's see. If we measure out this move right here from this bottom to this top, which is what I just measured, we already know that it is lining up with our 0.786 level. So we find -4, draw our line, and boom. Wow. That one right there is perfect. So that's going to be about it, guys. Those are the levels that you can look at and the things that you can look for. Key openings and stuff like that with our fib levels and our retracement levels, 50%, 0.25%, 75%. And yeah, those were some really good examples. You guys can go on your charts, try them out just like I did, and hopefully this helps. Peace. God bless.